Welcome everyone to today's webinar. My name is Igor Gorbatsevich. I'm Head of Growth at Shojin. I'm joined by my colleague Hugo Smiley, who works on the investor relations side, who's been working with investors, helping them set up IFISAs for many, many years. So today we're doing a crash course on tax-free property investing via IFISAs. This year's deadline is now, coming up. It's looming, and we hope to raise awareness about how IFISAs work, the different types, their benefits, and how you can get started with them. Before I kick off, I've just got to mention that we are talking about investment opportunities here which carry risk. And as with all opportunities, if you're looking to take the plunge, be aware that capital is at risk and there's a chance of losing everything. However, the saying goes, if you risk nothing, you risk everything. So it's finding that middle ground that you're comfortable with in making your investment decisions. Just to get started, I wanted to just give a brief background about Shojin. Ultimately, we're a fractional real estate investment platform. On the one side, the business, we provide loans to property developers who are using these funds to build notably residential projects across the UK. And then on the other side, we get these loans funded through our global network of investors and anchor investors such as family offices through our digital platform, thereby enabling access to these kind of opportunities that were never readily available or simple to access for global retail investors. So as a next slide, I'll explain quickly how the process works. Ultimately, when a property developer comes to us looking for a loan, our origination team go through the due diligence process, making sure that all the risks are identified and investors are compensated for that. We then package up these opportunities, and by this I mean we prepare the legals, we optimize the financial structure, and the vehicles, set up the SPV, the vehicles for investing, so it's ready to go for investors, and present these opportunities via our digital platform, outlining how the project works and the associated risks with these. Once they're live on the platform, we get these funded through, as I mentioned, a combination of our global investor base, as well as anchor investors that come in to participate in these projects. As soon as a project goes live and funds are released to the developer, our team then stays on top of this project, monitoring that the developer is performing on time and within budget to ensure that investors' interests are always protected. Once a project completes, and this could be via, when the construction is finished and all the units sold, or via refinance of the block, that's when investors get their capital and their interest earned back into their Shojin wallets for them to either reinvest into the next project or take back to their bank account if they so wish to. As you can tell, we're trying to make these products as accessible and simple for investors to participate in. Take advantage of these kind of opportunities if you feel comfortable with them. I'll hand things over now to Hugo, who can go through the relevance of IFISAs with regards to our opportunities.
Thank you, Igor. So what is an ISA? An ISA is an individual savings account that was introduced by then Chancellor of the Exchequer Gordon Brown in 1999, and it enables investors in the UK to deposit funds into an investment wrapper that is tax-free. Initially in 1999, the annual allowance was 7,000. This has increased over the years, and as of 2017, the annual allowance is 20,000. There are four main types of ISA: the cash ISA, the stocks and shares ISA, the innovative finance ISA, which was introduced in 2016 and is what Shojin is able to offer, and lifetime ISA. There are certain requirements for investing and setting up an ISA. You must be a UK resident, you must have a national insurance number, and for most of these ISAs be aged 18 or over. For cash ISAs it's 16. There are some restrictions and limitations, such as if you set up an ISA within the tax year and then leave the United Kingdom, you can continue to use that ISA throughout the current tax year, but you will be ineligible to set up an ISA in the subsequent tax years. It's important to note, though, that any ISAs that you have already set up from when you were a resident in the UK, you can continue to use and benefit from the tax-free savings. We will go into some more information and detail about the different ISAs in a couple of slides, but there's an introduction for you. On this slide, we will cover some headline stats and figures. On the left-hand side is a chart that demonstrates the amount subscribed to adult ISAs per tax year, and on the right-hand side, a chart demonstrating the market values for cash ISAs and stocks and shares ISAs. Since interest rates have increased, the UK has seen unprecedented demand for cash ISAs, with 2024 being a record year since cash ISAs begun, with over 50 billion deposited into cash ISAs, and there are a record number of cash ISA products available on the market, with over 500. The makeup of the two most popular ISAs is split at the moment 60% investment into stocks and shares, with roughly 40% into cash ISAs. Since the launch of the Innovative Finance ISA in 2016, it has grown in popularity, and this is represented on the chart on the left. We expect there to be ever more popular to invest in ISAs, given the recent changes on capital gains tax and restrictions when it comes to investing. Hand over to Igor again to talk through some of the benefits.
Brilliant, thank you, Hugo. So ultimately, investors should be thinking of ISAs as the biggest, most generous gift that you could get from the taxman, and therefore it's very, very important that you use them, the total allowance, which is currently set at £20,000 per annum. The big benefit is the fact that when you invest via an ISA, all profits that you get remain tax-free. So that profits can be either dividends, income tax from interest, or capital gains. And therefore, it totally makes sense to max out that allowance every year. Further benefit is that there's no need to report on tax for tax purposes with regards to ISA investments, so you don't need to add them to your self-assessment, which makes the administration easier. And another benefit is that there's a wide variety of investment options, which Hugo can tell us a little bit more about.
So, which ISA is right for you depends on your life and financial goals. As with any investment, it's very important that you make sure you understand the risks, the restrictions, the limitations, and what you can and can't do. All of the ISAs have different restrictions and different risks and different allowances, so it's important to take this into account before picking which ISA or ISAs to invest in. The three most relevant ISAs I imagine for anyone on this webinar will be the Cash ISA, the Stocks and Shares ISA, and the Innovative Finance ISA. Those three have an allowance of £20,000. The Cash ISA is, as we've just discussed, increasingly popular. However, the returns are quite low, with expected returns at the moment are averaging around 4.5% per annum. These cash ISAs are typically offered by banks and similar institutions, and any funds invested via a cash ISA are protected by the Financial Services Compensation Scheme. However, it's also important to note that often with a cash ISA, you might have to fix it for a period of time, typically 1 year, during which there may be penalties for withdrawal, or you may not be able to withdraw the funds at all. This is important when considering your short and medium-term financial life goals. If you need access to the funds, make sure you're able to withdraw them. Stocks and shares ISA, the most popular one as we saw in the previous chart, enables you to invest into stocks and shares, typically through platforms like Hargreaves Lansdown, where over the last 10 years the average return has been 9.5% annually. Of course, stocks and shares ISAs have led to certain individuals becoming ISA millionaires through very smart investments. However, there are also risks carried with investing in stocks and shares, and you should be aware of these before investing. A lot of stocks and shares ISA platforms do charge a fee, so be conscious of that before you sign up. The Innovative Finance ISA, which was launched in 2016, which enables individuals to invest into loans provided by peer-to-peer companies. You could be lending to an individual, to a business, or to a property developer. All of these have different risks and generate different returns. Obviously, with Shojin, you would be lending to property developers, and we have been generating returns of up to 18% per annum. Indeed, Jasmine Birtles recently wrote an article on the Mail on Sunday, speaking positively about her IFISA experience, and particularly with Shojin, and our returns favour well. People will also be aware that there are other ISA options available, such as the Junior ISA, where people can invest funds for children aged between 0 and 17. The allowance is smaller at £9,000 per tax year, with returns typically between up to 4.5% per annum. There are, of course, withdrawal restrictions on junior ISAs, and these funds can't be accessed until someone turns 18. The Lifetime ISA also has an age restriction and is only open to people who are aged between 18 and 39, and I don't imagine it applies to many people on this webinar, but you can take advantage of a £4,000 annual allowance, and the government provide a 25% bonus on this, and it is used to help people make a first-time house purchase. What's not listed on this slide is about the flexibility of ISAs. Some ISAs are not flexible. What that means in simple terms is that if you deposit £10,000 into an unflexible ISA, don't invest it, withdraw it, and then decide you want to put the £10,000 back in, an unflexible ISA will actually deem you to have used your £20,000 allowance by depositing £10,000 on 2 separate occasions. Fortunately, the Shojin ISA is a flexible ISA, meaning that any funds that you take out within a tax year, providing you deposit them back in within the same tax year, those funds aren't double counted as part of your annual ISA allowance. So it does give you some flexibility. It does also enable you to take advantage of different investment opportunities within different ISA vehicles. Igor's going to show you how to invest through an IFISA with Shojin now.
Brilliant, thank you. So there's ultimately 2 ways that you can invest in an ISA. It's either bringing in fresh cash of up to £20,000 per tax year across all your ISAs, or transferring any ISA funds from previous tax or current tax years also. Both methods are automated through our investment portal. So to bring in fresh cash and open an IFISA account, All you need is your national insurance number and looking through the terms and conditions, and then you're good to go. And transferring an existing ISA from another ISA provider is just as easy. It just involves plugging in some details about where your ISA funds are sitting and with which provider. That auto generates a form for you to sign and send back, and then we manage the rest of the process, i.e. get in touch with that ISA provider and get your funds into your ISA, Shojin ISA wallet as quickly as possible. So the government has been quite favourable and positive towards encouraging investors to participate, in ISAs and have savings set aside. Hugo, do you want to touch upon these, please?
Sure. There have been some recent frustration amongst the investor community over some of the restrictions that were in place with different ISAs. For example, you could only open one type of ISA within the tax year. So for example, if you deposited £10,000 into your Shojin IFISA, you would then not be able to open another IFISA with any other provider during that tax year, which is obviously a limitation. Whilst we obviously hope that you would use your full ISA allowance with Shojin, the current new regulations enable you to open an IFISA with a different provider and then perhaps invest, say, £10,000 with Shojin and £10,000 with another platform. You can also now partial transfer your ISA balance, whereas previously you had to move the entire balance. This also enables people flexibility. For example, if one of your projects was to repay during a tax year, you would be able to transfer funds across to a different provider without having to wait for the whole allowance to mature. Likewise, applying for ISAs and renewing ISAs, they've lifted the barriers here, meaning that, for example, if you set up a Shojin ISA in this tax year, starting your Shojin ISA in the new tax year in April is very easy and is as in continuous. There are no new application forms, making it easy as ever for investors to enjoy a smooth experience and hassle-free. So, looking at Shojin's platform and what you can invest in, the vast majority of our projects are ISA eligible. It will always be detailed clearly on the project card and on the investment memorandum whether the investment is ISA eligible. We email all investors ahead of a project launch and the details regarding ISA investment will be made clear. One such available opportunity on our platform at the moment is in Edenbridge, Kent. Edenbridge is in the commuter belt region of London, approximately 40 minutes into London Bridge on a direct train. This is a project that commenced in September and construction and development is already significantly progressed, as you can see in the picture. Experienced regional developer, and this project is offering investors currently 17% per annum returns, is ISA eligible, and interest starts to accrue from the moment your funds are invested. If you would like to see this project, I suggest registering if you haven't already registered, or logging in and reviewing the details. When you're logged into the investor portal, you can also see other live investment opportunities and all previous closed investment opportunities. Or if there's nothing you see that appeals right this moment in time, we have a good pipeline of new deals and we will email investors in advance of those going live on the platform.
Fantastic, thank you. So it's just worth noting now that the ISA deadline is fast approaching. The current tax year ends on the 5th of April. So that gives everyone enough time to max out that 20k allowance for the year. It's worth noting that as long as you put your funds in, for example, a Shojin ISA wallet, that will shield those funds from the taxman, even if there's not an opportunity available that you want to go for. That way, at least you've built up your ISA pot, and as soon as the right project comes about, that's when you can get it started. So I can't stress enough that it's a hard deadline. If the funds aren't in before midnight, then you've lost out on that big tax break that the taxman is so generously currently granting us. With this, we'd like to move on to Q&A. We've given you a good overview, but I'm sure there'll be some questions which we received actually prior to the webinar as well, which we'll cover. But just keep them coming in the Q&A box.
A couple of questions that were asked by investors in advance. One was, is the interest paid by a project during the term of the project held or eligible within the ISA wrapper? Yes, any capital or interest repaid or paid either during the project term or at the end of the project, providing it was an ISA investment at the beginning, counts towards your ISA allowance, ISA balance. So for example, if you invested £10,000 and you earned £1,000 of interest, at the end of that tax year, your ISA allowance for that would actually be £11,000. The same goes obviously if you go above, if the interest earned or the capital gains are above the £20,000, your ISA value has increased during that period. It's not limited only to £20,000. Someone also asked about joint accounts and bank accounts. Individual savings account means that this is a product per person. You can have as many ISA accounts within the family, but joint accounts is not something that we can or anyone can offer. An account has to be set up within that person's name with their national insurance number and ensuring that they are a UK resident. Over the age of 18, of course, if people want to use up allowances on behalf of their children, which is something we see often, we can also facilitate that. People can deposit funds via a joint bank account into an ISA, but the account must be held individually.
It's worth it, so you can stop sharing just in case some more questions are coming through. It's also, someone's asked about fees. With Shojin, there's no associated fees with opening an IFISA with ourselves. So, yep, that once again, we want to encourage that. So there's no fees charged, for opening or maintaining the ISA account with ourselves.
Couple of other questions here. The junior ISA is not part of the 20k annual allowance. The junior ISA allowance is completely separate. It's a separate investment. Likewise with the lifetime ISA and the junior ISA, those allowances are completely separate. So you could have £9,000 in a junior ISA and then £20,000 within a cash ISA, stocks and shares, or ISA or an IFISA. So that is, separate. Question on, please can you confirm whether there are charges to transfer ISAs in and out? Shojin charges no fees to process transfers in or transfers out. Relatively unique. We do often have investors complaining that they are being charged to transfer in or out of other ISA providers.
Yeah, check with your provider just to have that certainty.
Someone has asked, I have a SAS. Would it be suitable investment for what you have? So a SAS, we can accept SAS investments via registration via a trust. This is separate to the ISA. A SAS is technically a company and therefore cannot take advantage of any ISA benefits. If you want to know more about what is required to set up a SAS on our platform, please contact me directly or send us a message at invest@shojin.co.uk and I would be more than happy to help.
We can also make, with regards to pension investments, we can also make introductions to pension providers if you're looking to invest via a SIP. there's options and contacts that we have to enable that into Shojin projects also.
Someone has asked a good question, and sorry if I've caused any confusion on this. No, so they're saying do the gains made count towards the ISA allowance in that tax year? No, so sorry for the confusion. Any gains do not count towards your annual allowance, they just increase your ISA value and your ISA balance. So for example, if you invested £20,000 and you made a 10% return and you earned £2,000 worth of interest, your ISA balance or value at the end of that tax year would actually be £22,000. It doesn't restrict, the allowance is based on deposits, not on returns. Please. Okay, does Shojin expect to release any new ISA investments in this tax year? If so, how many? Yes, we hope to certainly launch one or two new projects in the next couple of weeks ahead of April. Obviously, deals are subject to approval, legals, etc., and we will only put a project on the platform when it has gone through all the necessary required sign-off process and we're comfortable with it. But I appreciate there hasn't been a project in the last couple of weeks, so we hope to have something live soon for you. Does ISA investment grow as compound interest way? So yes, it's a difficult question to answer because each ISA operates in a different way. The IFISA with Shojin, interest earned doesn't compound. So if a project repays and you are repaid £2,000 worth of interest, unless that £2,000 was reinvested, the value of that would not increase. There are obviously other products in the market where interest compounds, but that is not something that Shojin offers.
But your overall ISA pot does compound over the years. Going back to Hugo's example, where you've invested 20,000, that's become 22,000. That entire 22,000 is now tax-free to earn future returns. So the whole pot compounds over the years.
Just to go back to the person who asked about SAS, our investments are SAS suitable, eligible. Again, happy to talk through how the mechanics of it work, but probably best done offline. Question on charges. Shojin charges no fees to investors. All the fees are charged to our borrowers. The rate of return that is advertised is the rate of return you'll receive. There are no fees charged to set up an account or for the ongoing management of the account or for transfers in and out of funds. All fees on that are incurred by Shojin and paid for by the borrower. This presentation will be available through email and ready reference. Likewise, if you ever have any questions that you want to meet us face to face, you want to pick up the phone, you want to send an email, Igor or I, or there's a few others in the investment team, will be more than happy to help.
We'll also send round a replay of this webinar for you to watch again or share with your close ones.
I have to manage my investments with Shojin? So you have to manage your investment decisions with Shojin, and Shojin doesn't make investment decisions on behalf of investors. We are not regulated to advise. We do provide, however, very detailed investment memorandums and information on projects, and are available to answer any questions you may have. But ultimately, investors have to pick and choose the investments that they want to invest in based on their own risk appetite and what the type of portfolio they want to build. How often do you update on returns? Is it quarterly? So we email and upload quarterly reports to investors on the platform. So yeah, quarterly at the end of each quarter. We are in the final stages of having investor statements ready in terms of updating on returns, meaning that investors will have access to statements that will demonstrate their accrued interest to date and their account balance. This was a new feature for Shojin, and we are excited to launch it in the coming weeks.
That's right.
Do you give a rating on investment opportunities and share the due diligence done?
So with regards to the IMs, we go in a lot of detail. These are typically 20 to 30 page documents which outline, the ins and outs of the projects. Obviously, we can't put into those documents all the due diligence that has been, carried out and all the intel that has been gathered. But we're always, fully transparent. If there's any additional questions that you have, or you'd like to see, independent valuations that have been carried out, please do reach out and we'll answer any questions that you might have. There's nothing to hide with regards to the due diligence, which we pride ourselves on.
On one other point I'd add is, whilst we don't give a risk rating to projects, the rate of return is often indicative of the risk. So something paying 4% would inherently be less riskier than something paying 20%. Not always the case, and obviously you should understand the different risks and why the return is as it is advertised. But if you don't, for example, have a real estate background, understanding rates of return and the relative risk to those is a useful place to start. Do investments usually repay on time, or do investors face delays? Investments may be delayed. Historically, we've had a good performance of investments, with investments paying out. Obviously, with real estate developments, there can be delays, either seen or unforeseen. We will communicate any changes to a project with investors, either in the quarterly update, or if it is more pressing, via webinars like these or one pages. Penalty interest can be charged on projects that are running late, so that investors are compensated for any delays. Obviously, in recent years as well, with supply chain issues, Brexit, interest rate hikes, there have been a cause for delays, although we will continue and always do work very hard to ensure that investors are exited at the project end date. There are many options available to us, and we will keep investors updated if there are any delays. We obviously hope there are not.
And with regards to project durations, whilst we strive to estimate the length of projects, one protection mechanism that we've got in place is actually structuring the deals with a fixed return, which means that if a project was expected to last 18 months but has gone on to 20 months, investors still continue to accrue interest for that entire 2 months extra. And that should incentivize the developer to pay back the investors as quickly as possible for them to move on to the next project.
Above. How many projects have been paid out over the past year? It's a good question. Last year, 5 or 6 projects successfully repaid investors, which was great news. So that was funds back into wallets. We saw a great reinvestment rate, as well as people obviously maximising the returns within their ISA, which is what it's all about. Some of the projects to exit by name were Romford, Chadwell Heath, Oakley Square, to name just a few. Do Shojin have funds invested as well, or is it only investors?
So whilst we previously had physical cash co-invested in each project, as we've looked to scale the business, parking the cash in the account, we've stopped doing, but instead of that, we've introduced a guaranteed amount for any capital loss that could be incurred, which is effectively the same way as putting the cash aside. The details of this is always included in the investment memorandum, but if you have any questions with the specifics of how this works, please do get in touch. So just to summarize, whilst we don't physically put the cash there is a protection mechanism, which means that we do have skin in the game in each project that we present.
Two other questions. Is Shojin also taking part of the risk, and how long has Shojin been running the process? So Shojin does take part of the risk, as Igor's just alluded to, and another way in which Shojin takes part of the risk is that we only essentially get paid when investors get paid. There's a small fee charged up front for arranging the loan, but the interest spread that Shojin makes, which is our fees, is accrued as well as the investor's interest. So it is very much within our interest to make sure investors are paid out in full, because Shojin will only earn our fees once investors have been paid. It's important to note that we have as much interest as investors in making sure the project is a success. Shojin's actually been operational since 2009 in various different guises, but has been, for everyone on this webinar's purposes, an investment platform since 2017, regulated by the FCA, and fully operational as an investment platform globally since 2017. Was that at the advertised rate? I presume that question is to do with the projects that exited. Yes, all of those projects that exited were exited at the advertised rate. So investors who had invested, say, at 18%, the interest accrued at that rate and was repaid at that rate. Yeah, no discounts. All investments were repaid in full at the advertised rate. What is the long-term plan for Shojin? What will things look like at, say, 5 years' time?
It's a good question. I guess what we're trying to do is to continue to make these kind of opportunities as accessible as possible, as simple to access, and broaden the range of opportunities available. So one strategic aspect, to give you an example, is we're looking at whole stack loans. So not only focusing on second charge, but also including the first charge, which obviously has a different risk parameter, different returns, etc., which will give investors more opportunities to diversify and get involved in projects that they're most interested in. Likewise, another strategic initiative is to partner up with other platforms and make this asset class truly mainstream and comparable across many geographies, different products, etc. Ultimately, we believe in the fact that we can make fractional real estate just as mainstream as stocks and shares, as bonds, etc. are. But we've realized we can only do that in collaboration with different platforms, different parties across different geographies that know how to do the due diligence on the ground and be able to secure the investments, for the investors, in the same way that Shojin have done. Is there anything else, Hugo?
No, I think that is that covers it well. I think investors should look out in the coming weeks and months for whole loans, so the ability, as Igor said, to invest at a first charge, but also mezzanine and sometimes obviously preferred equity positions, meaning that you can build a varied portfolio with different risk-weighted investments within that. Someone's asked a question about failures. we're always transparent. There's only one project that has been a capital loss, where there's been a capital loss. It was 7 or 8 years ago, if I'm not
Correct. It was
mistaken.
in the more early days. Correct.
And it was a high risk, high return project that where there was planning risk, and subsequently Shojin no longer takes planning risk, so the lessons have been learnt. And as I said, that was 7 or 8 years ago. That's not to say, obviously, that all projects have exited on time. As we've already discussed, there have been delays. There are projects ongoing where we are working with the developer and professional parties to ensure investors receive their capital and interest back. But yeah, only one project that has been a total failure, if you like, where investors have actually lost money. Can you share a bit more about the team? Sure. So we are now a team of around 20 people based in the city in London, with a real mixture of industry and relevant experience. Igor sits on the management team, so I'm sure he can give you a little bit more flavour about the other members of the senior management team.
Sure. I mean, broadly speaking, the team is between the origination side, who look at, doing the due diligence on the projects and overseeing them. Then there's the investment side, which deal with the investor relations questions, and the project side with investors. And that's backed by a support team, including finance. We've now got a data team in-house, and most recently we've brought in legal support, in-house counsel, to once again help mitigate risks through the contracting process and any projects that might be going off-piste.